All right. Happy Monday, everybody. Here's the new weekly market huddle with Joe Lucey. Can you do me a favor? If anybody can hear me, can you just post a little comment? Let me know that you're out there, that I am actually broadcasting. All right. I had a text message. So, uh, happy Star Wars Day here. It's the 4th of May, so may the 4th be with you. Anyways, um, tomorrow's Cinco de Mayo, and here's your weekly market huddle. So, a couple things. I think today's theme is going to be about should you sell in May. There's an old adage saying sell in May and go away, don't come back until St. Leisure's Day, which is an old English time when during the summers when the British would take time off. In the U.S., we've kind of redone this a little bit and said, okay, we're going to do this as a go away in May and then don't come back until Halloween. So we'll kind of see where we're at there. But I want to welcome you again to our weekly huddle. Here is basically the obligatory disclaimer that I have my attorney saying that we should let you know about. Keep in mind that things that we're going to be talking today, a lot of it are going to be looking forward in nature. We have no control over the future, so therefore what we say should not necessarily be construed as a promise or guarantee of the future, anything like that. So here's where we've been, right? We are now up 23, 25% from the market bottoms. We started doing these weekly huddles that we're going to start calling them here. Steve, you were close, but we kind of went with huddle. We're going to do these every week, but I started doing these. The very first one was on March 23rd, pretty close to the bottom of the stock market. We were at 18,500-ish. We are now at 23,500, so up substantially from the bottom. In fact, if you go back over the last 12 months, we are only down about 10 or 12% from the market highs. So, well, it doesn't ever feel good to lose money. It feels even worse when we lose it fast. We've come a long way, so I think that maybe the real question is, where do we go from here? Lots of reasons why the markets the last couple days have been a little bit more sketchy. We've got some concerns about us opening up the states. Minnesota here, we're still locked up until the 18th, but other states are starting to open up. I have some relatives in South Dakota. South Dakota is fairly open. I know that Kansas is kind of going county by county, and even there, there's a lot of. So it seems like the agricultural areas. I think that the Northeast is going to take some more time, but we have that going on. We've got some rhetoric here going on and back and forth between President Trump and China, and whether or not we're going to be doing tariffs. And we got big news here today that Warren Buffett blew out of all of his airline stocks. He says that the new normal, he's optimistic on the overall direction of the market from here. He thinks that the airlines are going to have a pretty tough go of it. So he sold off some airline stocks, and that's affected everything from, Delta, United to Boeing and what have you. Other folks are kind of pointing at that, hey, you know what? We just kind of recovered really so fast that it has to kind of take a breather here. But I think that another thing that we're going to start hearing about is this sell in May. It's been a phenomena, I guess, that they have been talking about how when it comes to investing in the market, you should sell off as we get into May. People start taking more time out of the market. The banking industry slows down and what have you. Keep in mind that this is the strongest S&P return we've seen in 82 years for the month of April. In fact, since 1987, last week was the best return we'd seen since 1987. So there's been a big upswing, but now it's got to be focused. We got to focus on, what's wrong. How come the market's coming down? And I think we're going to start seeing a lot more about how you need to start selling May. So as I said earlier, that's where goes back to the old English adage that you'd sell off in the early in the market. Here's a coronavirus thwarts the sell in May tactics for stocks. Stocks had a great month. May want to sell in May and go away. Here's some numbers. The sell in May and go away is an investment adage warning investors to divest their stock holdings in May and wait until the reinvestment in November, basically Halloween. Now, from 1950 through 2013, so for a 63-year period of time, the Dow Jones, actually, there was some fact to this selling off in May. In fact, you compared it to November to April, the May through November time period, the Dow Jones and the markets really did have there was a big divergence there, a lot of difference. But now going back to 2013, and this slide does a decent job of showing it, selling off in 2013, you missed a 10% return between May and November. 2014, 7%, 2.9%. Yeah, 2015 was down. 2015 was a pretty flat year all in all. 2017 missing 8%. I'm going to say, maybe selling off in May may not be the best strategy. Missing a good rate of return. Now, again, a lot of this is forward looking. I don't know what the markets are going to do over the next 2 or 3 weeks. I will say this. If you are in a position where you need to take some money out of the stock market, if you don't have anywhere else to take it from, if you don't have an account that's protected from market value adjustments, whether that's cash or maybe you're using an indexed annuity or maybe you've got a CD or somebody maturing, if you're going to be forced to take out money from the stock market here over the next, I'm going to go past the next 6 months. I'm going to say if you need the money in the next 6 months, you definitely want to make sure you have access to that. Don't go into debt because you have an obligation. If you are outside of a 5-year time horizon, I would encourage you to sit down and maybe look at the asset allocations you have. Maybe there is other ways that you should be allocating your money, moving more of your money towards something that's going to be protected from market value adjustments and maybe less for the wealth accumulation. Now, if you've worked with us, you know that I'm a huge fan of wealth accumulation. But I also understand that most of our clients are hiring us for, 3 things. Number one, they want to maintain their lifestyle. Quickest way that I know that you can end up going through your entire life savings is bad timing in the market. The market it took a shot across the bow here. We should all be waking up that putting 100% of our money that's there for retirement into the stock market, especially if I'm going to be taking money out, may not be the best strategy out there. You may want to start looking at how to make sure that you have a certain amount of the income protected. Big fans here of what we call mailbox income, money that hits the checkbook each and every month, regardless of what's going on in Wall Street. You should be a big fan of that too. If you've got money that you need short term, I would do anything I could out of taking money from the markets right now. If you know you have money that you have an obligation that has to come out over the next 5 years, maybe even go 10 years, let's sit down, put together an asset strategy that can show you how to get a decent rate of return on this money without exposing it to market risk. But money that's out there for longer than 10 years, you want to keep that money, many families, depending on your risk tolerance, want to probably keep that money growing for wealth accumulation. Again, I said this a second ago. Families hire us here at Secure Retirement Financial looking for 3 things. Number one, they want to protect their lifestyle income. They want to maintain their lifestyle. I've never met anybody that's come through our door, and we've helped thousands of families a year for, I'm going on 26 years. Never has anybody come in and said, Joe, show me how I can get less in retirement. We all want more. So let's maintain the lifestyle income. We do so by having money that hits the checkbook each and every month, regardless of what's going on in Wall Street and the 401k balance. Number 2, if I can show you how to reduce taxes, how do I morally, ethically, legally help you reduce taxes? I feel that that's our obligation. In fact, it could be the largest expense with over $3 trillion in newfound stimulus over the next 10 to 12 years. If I'm looking at an area of inflation, I think we found it. We're going to see taxes going higher. So what can we do? Again, keep the income, reduce taxes, and if I can, let's grow the wealth. I think the real question is, where do we go from here, right? Selling May, going away, I don't know. If the markets are going to do something closer to what we've done over the last 7, 8 years, and kind of show where doing this strategy and getting out of the markets in May have been, for the most part, problematic. Heck, new normal, who knows what's going on? I guess sometimes it takes a difference on how you're looking at the perspective you're taking. A lot of news out there still about how crummy the economy is, how awful things are at. Keep in mind, the stock market's a forward indicator. We are likely going to see the markets recover prior to we see the worst of things. I think that the states, I think we're going to be fully, but if you're waiting until every state opens up and the restaurants are all open for business and we're going out and enjoying Vikings games and Minnesota Wild games, that you probably have waited too long. What's going to happen over the next 3 weeks to 3 months? I have no clue. Neither does anybody else. If there's another place to take money from outside of the market, I encourage you doing that. If you know you're going to need money over the next 5 years, let's show you how to put together an allocation. So it doesn't really matter if you're looking at things maybe sideways or upside down, because this picture here obviously shows that we turn that up to where the economy is on the bottom, and it's not a good place to be. Allianz, many of you are aware of Allianz, had a piece that I came across here the other day. Actually, I'll credit this to Ryan Dillon in our office. He came across this and said this would be a great thing to talk about on the weekly huddle. If you lose 10% of your savings for retirement, and we only average a 3% rate of return, it's going to take you 3.6 years to recover. However, we get an 8% rate of return. It takes 1.4 years, but still, it takes a long time to recover. You don't get it all back. We have to retest our lows. We go down another 30%. 3% return is 12%. 8% returns, 4.6. So maybe what we need to do is just make sure that we've got the right kind of asset allocation. I want to separate the term asset allocation from diversification. Diversification is when we put together a complementary portfolio that takes in different kinds of investment strategies, large companies and small companies, bonds, maybe even blending in some of that blue money that we talk about, real estate, commodities, looking at medium-sized companies, growth versus value. That's all Wall Street money, though, right? That's money that's going to be exposed to market risk. True asset allocation says I'm going to bring in certain asset categories that are not necessarily correlated to the market. There's no cause and effect. My house doesn't care what's going on in Wall Street. I'm not saying the house can't go down in value. I'm just saying that if Wall Street goes down, my house doesn't necessarily have to follow that like most of the red stocks and bonds do. Also have money that's green money that's protected from market value adjustments. Make sure that you've got a place to dip into. If you've got that obligation in 3 months, that money probably needs to be sitting in the bank. If you've got money that you're going to need in 2 or 3 years, there's other instruments that are out there that can get us a better rate of return than cash and savings in a low interest environment here, but yet doesn't have to expose our money to market value adjustments. It really comes down to making sure we have our priorities with your retirement planning in place. Number one, if your priority is to get back the money that you want for income without sacrificing your lifestyle, like many of us do, that's what we want. If we can show you how to legally, morally, ethically reduce your taxes, we can do that. And then we're going to try to grow the wealth, but we don't ever want to do that exposing risk to you being able to take your money back or even having to pay more than your fair share in taxes. That's kind of what we've kind of built our philosophy on. If you are a client of ours, or if you are just attending this webinar for the very first time and would like to sit down or virtually have a visit with one of our advisors here that can walk you through what we call our tax smart retirement process. In a moment, I'm going to open it up and offer a 15-minute review. Should be a calendar event on your computer there. If you just click that, you'll automatically put on the calendar, shows you some available times. Click what works for you. If there's nothing available, you need something outside of that. Again, all of these calls are going to be virtual. We can do it as a face-to-face with or face-to-face, phone-to-phone, or we can do it video to video or video to phone, whatever works for you. If the time on that I just scheduled doesn't work for you, feel free to call our office at 952-460-3260, 952-460-3260. Also, I want to thank those of you that are clients of ours that are referring family and friends. This is a time that a lot of folks are looking for advice. They're looking for more than just wealth accumulation. They're looking for retirement planning. How do I bring that wealth accumulation together with an income plan, a tax saving strategy? That's what we do. That's what you'll get. Your clients will get with the 15-minute review. And I know that last week, I think we had 8 different 15-minute calls just with families that were referred by friends and family. So I want to thank each and every one of you that have been thinking of us and thinking of your friends as you're going through that. If that's the case, make sure you give us a call or have your friend or family give us a call. With that said, that's all we got for this week. I promise to keep these short, and I think I did a little bit better job than I have in the past. So with that said, enjoy some nice weather out there. It looks like it's going to be a good week to get out and about for a walk or a round of golf or whatever that is, or on the lake. And we'll be back next Monday, same time here on noon. Enjoy a little bit of Star Wars movie here tonight for the May 4th, and maybe a margarita for Cinco de Mayo tomorrow. Have a great rest of your week.